There are still 3 months left in the year, but time is running out to take actions to benefit your tax situation for the next year. That's why we are happy to welcome back our friend Kristin Afelumo with HerPlanning to discuss what you need to know. What are some strategies that people can do now? It's October, but we're already thinking about April. What can we do to set ourselves up?
So it is tax planning season. So if you haven't checked in with your financial advisor or your tax accountant, now is an excellent time to do that. I'd say the #1 recommendation I make to clients, and I just sent out communication about this last week, is make sure you're maxing out your contributions to your IRA and your 401k. You can contribute, in most cases, $7,000 to an IRA this year and deduct it from your income taxes. And you also can contribute $23,500 to a 401k this year. You do have to make those contributions with your payroll. So if you haven't been on track so far this year to make that happen, making a change to your contributions between now and the end of the year is a great way to get there.
It might have to mean you tightening the belt a little bit.
It might mean that, yeah.
So doing that now, how does that pay off in April?
So any money that you contribute to your traditional 401k gets deducted from your taxable income. So for example, if you make $100,000 a year and you contribute $10,000 to your 401k, then you only get taxed on $90,000 of income in next year. Okay. So it really helps for you, of course, to save for the future, but it also helps you to get a little bit of a break on your taxes at tax time.
Sure. What else can you do now to maximize tax time?
So if your income has been a little lower this year than in previous years, you might want to consider doing what's called a Roth conversion. So let's say you're in a position where you've amassed a bunch of money in an IRA, you might want to transition some of that money over to a Roth IRA. The benefit would be in the future that money grows tax-free and you can take tax-free distributions. The downside is you pay income taxes on any money you do that with this year. So a little bit more of a complex strategy. Definitely, again, check with your tax accountant or a financial advisor to make sure that you know what you're doing and you get all the implications.
That would be a situation to have a professional kind of guide you through that, because the second you started talking about that one, I went, huh?
What about that?
Yes. What else can people do now, real quick?
It gets a little more complex from there. So
okay.
Outside of your retirement accounts, if you're investing in a non-qualified accounts, I refer to those with my clients as your triple tax accounts. Those accounts are taxed continuously. You may be able to do what's called tax loss harvesting, which means selling off stocks that have maybe been losers throughout the year and harvesting losses so that you can take that deduction against your taxes. Maybe you were planning on selling that anyway, those particular stocks, or maybe you weren't and you can buy them sometime in the future beyond the next 30 days. So it's a strategy that I execute for clients all the time, but you may want to talk to a professional about.
Yes.
Adversely, you might want to harvest some gains. Maybe there's a stock that you've been wanting to sell for a long time. Your income's a little lower this year. You can afford to pay taxes this year on that stock because your income's low. So maybe you want to harvest some gains. So again, having a professional that understands the total picture of your finances can really help, because they can make those recommendations and give you more confidence about executing the strategy. But
absolutely,
this is definitely the time to think about it.
Okay, yeah, good time for a checkup. Always great advice. Thank you so much.
Thank you.